All right, folks. So tonight we are looking at, you're able to see my screen, right?
Clearly, take it away.
All right, good. So tonight we're looking at another indicator that can be used, and once mastered, it really guides us as to how we function in our trading and how successful a trader we would become. So tonight we're looking at the MACD. And the MACD indicator really, MACD stands, or it means moving average conversion divergence, right? So it says here, the Forex market, one of the best tools that technical analysis has for trend identification is the MACD. So it's really designed to identify trends, to know, okay, fine, I'm going in a buy, okay, the trend is going up and the trend is about to change. So we actually use it to identify trend and know when the trend reverses. So it was created by a technical analyst named Gerald Appel from since in the 70s. And it helps you figure out which trend the price is in. It also helps you identify when the trend ends or it reverses or when a new trend is created. So it's actually a moving average. So there are two lines we're going to be focusing on here. And the relationship between those lines, are they converging or are they diverging? So that's what it stands for. It's really it's really moving average, but we are looking at them now. Are they converging or are they diverging to know exactly what actually happens? So this is the indicator here. That line, that down here. So you see you have your red here, and we have some bars here, like that bar chart here. There are small bars and there are big bars. Red here shows you, when you look at it and you see it red, we know red indicates we're actually looking for a sell. We're going in the bearish manner. And the green is when we're in the bullish looking for up here. So these bar chart here, histograms, if we want to call them that here, they actually shows volume and how volatile the market is too also. So although we're looking here green, it means there's a trend, a sort of an upward movement, but the size or the height of the bar tells you the size of the candle or the amount of volume movement in the market. The MACD line here, which is the moving average, or two moving averages combined, the 12 and the 26, which is that blue line here. That's our MACD, or moving average. And then we have that other moving average here, which is called the signal line, which is a 9, here. The signal line follows the trend. So if you look at that here, it actually just shows you the trend. When the market goes down, it goes down. When the market consolidates, it's sort of a level off. When we're getting into a buy, it goes up. So it actually follows the trend. So we are combining the trend with the moving averages here, 12 and 26. And a lot has to do with the intersection, the convergence or the divergence with those two lines here. So there are some important factors here. One, where these lines cross. It says the zero line, because all this time here, we are going down the candles, the bars were below that zero line here. There's a zero line here, right? It was below that line here. And once they cross, it neutralizes here, and then there is a no value before it changes on the other side. So we read here because we're going down, but then it changes green through some consolidation, and as we start going up. There's also some shades. The darker the shade is the more conformity we have, or the certainty we have of the movements. But also that darker color shows us a greater distance between our signal line and our MACD line here, right? So again, our MACD line, which is the blue, our signal line is the yellow line. And our focus really is the intersection between our MACD, or moving average, and our signal line. We see something is happening here, it tells a story. We see something here, they have a cross, it also tells a story right here. We look at it, we follow it up here, it expands here, it goes, it crosses here again, something else happens, which you're going to see in a while. The MACD indicator consists of three main elements. The MACD line, which is the dark blue line, it is a combination of the EMA 12 and the EMA 26, which shows the price development trend. Then we have the signal, which is the orange line or the yellow, as I said earlier. It is the EMA 9 and it is used to track the trend of price. So really, that yellow line, orange line, follows the trend of the market, and our dark blue line is our moving averages of 12 and 26. The histogram column is for measuring the degree of convergence or divergence between the two moving averages. It shows whether the speed of price change at the given time, if it is fast or slow. Or in other words, there's a lot of volatility or a lot of movement or momentum in the market. So look, for example, this candle here. Look at that big candle here. So as we have that big movement, the only time we have some little movements, the candle, the bars here are small. But as the bars increase in size, we see increase in size also what's going on here in the volume of the market presently. How to use the MACD indicator in technical analysis. So strategy 1, trend prediction using the MACD. So we're actually predicting the trend. This is the convergent characteristic of the MACD indicator. It means that the direction of the MACD is the direction of price. The direction of the MACD is in the direction of price. So we are working with trend, we are predicting trend. So when we see those here, we know we are moving the direction of price. So let's see what happens here. We're looking at the signal line and the MACD moving average here. They intersect at that area here. The blue line, the direction in which the MACD intersects the price line is very important. And that's the whole foundation of this indicator. When the line here, that blue MACD line, crosses the signal line in an upward movement right here, we see what happens here. We start seeing the trend is going up. So we are following it here and we are in the trade. We're going up and we're in the buy, the bull, and we're going here. And we are monitoring our indicator. But look at what happened here. It reaches to a point where it starts narrowing down here and our MACD line now intersects our signal line in a downward movement here. Look at what happens. It shows a change in the trend. And this goes on and on, it comes down all the way. Again, our MACD line appears as though it was going to cross. It touched it, but it didn't cross, it separated again. But even look at what's happening here. Just at the point where they intersected, we can see what's happening here. We would have gotten maybe a little upward movement, but it wasn't strong enough here. The bull wasn't strong enough, the bears were still there. That's why we continued on and then they started diverging here. And we have this other candle being formed here, which is that bearish candle being formed here. As we see that forming here, we didn't continue in the end, but it appears as though if this continue, either we were going to continue the downtrend, or if they intersect, if the MACD intersected here going on an upward movement, we know the trend was going to go back up. So this here is ready for us to predict what is coming up here. So we get our bias, we know what's going on, we get into the trade, but we use the MACD as an element to indicate to us, here's what, should I stay in the trade? Should I not stay in the trade? And mind you, because it is technical analysis we're doing, it is important also that we look at other indicators. So we don't look at the MACD just in isolation and say, I'm a MACD trader and that's all I'm trading on. No, but we use it for confirmation for the trend that we're working in here. If you have any question at any time, we can pause and deal with it, right? When the MACD line crosses the signal line from below, or the blue line intersects the orange line from the bottom, the price is trending up and the histogram columns would point up. So here we see that here. It crosses it from below, price is trending up, the histogram is going up. And that's our zero line right here. So once the histogram is on the upside here, because our price is going up, we're in an uptrend. When the histogram changes to the bottom section here, we see what's going on here. We are in a downtrend, and it also confirmed by our MACD intersecting our signal line in a downward movement. The market is going down. When the MACD line crosses the signal line from above, or the blue line intersects the orange line from the top, the price is trending down and the histogram columns would head down. So that was our first strategy, right? Trend prediction. We are looking at trend prediction, looking at the trend as it relates to the line, the intersection, and our histogram. Our second strategy is predicting the possibility of market reversal using MACD divergence. So convergence, to converge where they cross, we look at that here. But we're looking now to see divergence to indicate to us that the market is about to make a shift. Let's go back up and let's see what's happening here. So where they converge here, we actually know that we have a change in trend here. And as they keep going here, we see volume is increasing here. Again, it changes down here because it intersects down here for a downward movement here. But we can follow what's going on here, even at that point where we see we have that line here, and get an idea, an indication. Here's what things are going to change. And you are not working with this MACD indicator in isolation of the candlestick patterns, because our candlestick pattern is what runs the market here for us as traders. So it is very important that we take note of the candlestick patterns. The indicator here is just an assistance to what's going on here. Right. So another characteristic of MACD is divergence. You need to identify the divergence of the MACD line. From there, you can focus the possibility of price reversal. And look at the kind of words that is being used. None of us is certain as to what's happening, but we can still focus the possibility of price reversal. There are times you're in a good trend and you're going, and for some reason, something happens and the price just reverses. Some news or some person is speaking or something is happening and the market can change. So we have the possibility here. But when we look at the MACD divergence, there are two basic types of divergence. The bullish divergence and the bearish divergence. We know what bull is talking about here, and we have what the bearish in terms of direction we're looking at here. The bullish divergence appears when the price is in a downward trend, and divergence appears between the price and the MACD indicator. Here's what's happening here then. The price decreases, but the MACD increases. Soon after, the price reverses from bearish to bullish. Let's explain. The bullish divergence. So remember, we're looking at trend, right? And bullish trend means the market is going up. So for us to see a bullish divergence, means we're about to change trend to a bullish. We're looking for some indication that the market is going to change into a bullish upward movement. It has to be that the market is going downwards in a bearish direction. So for the bullish divergence, the market is going downwards in a sell, but we are looking for that divergence that's going to indicate to us, here's what, that sell wouldn't continue forever. I believe the market is going to change into a buy or into a bullish divergence here. So the price is in a downward trend. Remember that signal line follows price, but our focus is on our moving averages, our MACD, right? Our moving averages, that's the blue line, that's our focus here. So even though the price is in a downward trend here, price is moving down, so that's when we're in a downtrend here. And we can see all the way, okay, it's moving like that because of volume here, but the price is moving down. But then we can see there is a divergence. It's about to change. It's about to switch here. We're looking here, or even here, for example. Remember we said earlier, and we're just tying in everything here. We look at it here, or histogram below the zero line, we know it's going down. When it flips over green, it's above the zero line, we know we're going up. And this is what's been playing here. But now we are looking for a reversal. So look at what's going on here. Our MACD and our signal line, price is going down, our MACD is going down here. But although our price is going down, look at what's going on here. Our price is still going down, but our moving averages starts curving and starts changing to give us an indication. Here's what. This here is changing direction. And then we have here that divergence here, and then we can see what's going on here. It crosses it here, so it's going for an upward trend here. But still, look at what happened. We may say just a pullback because the market is continuing down. But look at that zone area here. Look at what's happening right in that area, right around that area. For a while, we see what's going on here. So it crosses it to go down, but here's what's going on here with our MACD. It is not just going down or shooting down, as is the case over here. It intersects it here and it goes down. Look at it. It intersects it here and it's going up, and we can see the effect with the price. But look at what's going on here. It's more or less kind of lagging, playing around the price, wrapping around the price right at that area. So it came here as though it was going down, but it didn't. Here, we have the divergence taking place here, and it gives us a signal as to what's happening. And look at it here. It leaves here now, and it starts going on here. So all for here, we have little consolidation here, which eventually, it's a gradual shift in the trend. It is not a steep shift so far, because if look at what's going on here. The MACD line is sort of playing in on our price, our signal line that's going on here for quite a while. But this area here shows us here, we have a little consolidation taking place based on the time zone. But because of the divergence here, the market is getting ready to change direction. It is not as pronounced as what's going on here. And what tells us this? Look at the volume, look at the size of the bars in our histogram here. That gives us that indication. Predicting the possibility of market reversal, as we just did here, now we are looking at the bearish divergence. And the bearish divergence appears, so we're looking to go down now. Here, the market, we're looking for an indication that the market is going to go in a sell. But for that here, it tells us that the market has to be in a buy for us to be looking for the trend to change, to reverse that trend. So the bearish divergence appears when the price is in an uptrend. Divergence appears between the price and the MACD indicator. How? The price increases, so our signal line is still going up, but the MACD decreases. And soon after, the price reverses from bullish to bearish. So we were going in a bullish direction, and we see our price line. Our price is still going down, but our MACD isn't going along with the price here. So far, our MACD is giving us that indication. Here's what something is happening here, just as it did in the previous slide here. So it's just really the opposite of what's going on here. And we still have it playing around, and then we get into that gradual downtrend here. Right? So we are looking for that bearish divergence, as we said. And for this to happen, we have to be in a bullish, in an uptrend, indicated by this arrow here. We are going up. But the divergence would have taken place in that whole area here. We see it's playing off here. And then we see the trend start changing. So now we can identify these here. How can we use this as an indicator? All right. So we are able, so let's just go back. Let's go back up to, all right, here. So we actually saw here earlier that when the MACD crosses our signal here for upward, we know we're going up into the bullish. Then we have that intersecting coming down, which is a clear-cut one here. And as soon as it crosses it, it's clear and it's going separate. They're here. They're not too close together here. We know we're going down in that downward trend. So we're identifying the trend using just this indicator. Here again, we just concluded that divergence here for reversal. So we're looking for a possible reversal. We are in a bearish trend and we are looking for that reversal indication that we are going to switch to a bullish trend here with our divergence. And we see that this is indicating that the trend is going to change. So if we are in the trade, we are going to get out of the trade. Likewise, the reverse is happening here. So now that we can identify these here, how do we know now how to use this effectively so that we can actually use that indicator to place our trades? Question, anyone? So Jack, any comment you have, or we can go ahead? Are we there?
I'm there.
Okay.
Yes, we are.
Right, so how to effectively trade Forex using the MACD indicator. And even before we go on with that here, there are many different kinds of indicators that can be used. Persons can become very, very confused. You try something, I'm trying something here, I'm going to use that indicator, and I lose the trade. You know, I'm going to change to another indicator. I win a little, I lose a little, I don't like this one, I'm going to change. And you have to spend time with indicators and understand how they work. Jumping from indicator to indicator doesn't make you a better trader. You have to learn to understand how things run and how an indicator functions so that you can use it to your advantage. So, the best time frame to use this indicator is 30-minute to 1 hour candlestick chart, right? A 30-minute to 1 hour. Again, our MACD 1226 and our signal line is our 9. Why 30 minutes or 1 hour? Because things happen so quickly. You may decide, okay, I have my MACD running and I'm looking at it in the 1 or in the 4 hours or in the daily or in the weekly. By the time that indicator already signal, it's already too late for the market. So you use this indicator in a 30 minutes to 1 hour time frame. Open a buy order with the MACD as follows. The entry point is right after the MACD line crosses the signal line from below and opens up. Remember, if we're talking about buy, we have to get that line crossing from below pointing upwards. But here's what, not when you think it is going to cross. Look at what it says here. You enter right after the line crosses, not because you find it's getting close. Because what can happen, you can get close to the signal line and it just continues on or it bounces back. We have to wait and we have to remember our candlestick patterns also. Our stop loss is at the lowest price level before rebounding, right? Before it changes here, our lowest previous, and this is the same principle that is applied throughout the sessions we've been doing here. You don't need the MACD to remind you as to where you put your stop loss. And your take profit, we take profit when the MACD line crosses the signal line from above. So let's see what happens here. So we're going for a buy, right? And we're looking at it, the market is moving all the way here. And now look at it, look at what's going on here. All over here, the MACD and the signal line, they're loving up one another here. That whole area here. So there's no movement here. You're waiting, you're not entering the trade. As we have a little divergence here and we have the convergence here now where the MACD crosses. Look at what happened here. Remember it crossed, but it still started to play around for a long while. So we're not trading in here yet. But it crosses, and as soon as it crosses and it shows you, here's what, I open up myself here. Then we enter the trade at this point here. After it crosses, we enter the trade. Look at what's happening here. It appears here as though the line was going to cross for a down. So we say, no man, that's crossing it down. So I'm going to go for a sell. But look at what happened. It just stayed all the way on it here. That's why we don't do it like that. We wait until it crosses and it gives us indication. So here it crosses. This is our entry point on this candle. And what happens? Our stop loss goes 10 to 15 pips below that lowest point. And this is our stop loss here. We will have entered here. And what do? We ride out and we follow, we look at the MACD and we watch it what's going on. It crossed and it is still above our price line or moving average. So we stay in the trade and we stay in the trade and we stay in the trade. And when do we get out? We get out when the MACD line crosses the signal line in a downward movement. This point here, we get out of the trade. We get out of the trade right here at that point. We'd have gotten a little few pips up here, but we'd have lost a little here, but this is a safe zone here. When that moving average crosses down, we know here's what? Time to get out of the trade. Why? Because it has the possibility of coming back all the way down, or maybe doing that same kind of consolidation movement right here. So we get out of the trade and we monitor and see what happens. That's when we're going for the buy. We open a sell order where our entry point is right after the MACD line crosses the signal line from above and open up. So the MACD is coming down, the blue line crosses the red line from above. Or well, not the red line in that case, we have our yellow line, right? So our MACD crosses, not yellow, but orange. Yellow equal orange here, anyways. So we open a sell order right after the MACD crosses our orange line. And our stop loss is at 10 to 15 pips above the highest price level before it fell back. And our take profit again is just when the MACD is about to cross the signal line from below again. Let's see it in action. All right. So the market is moving and the market is moving. Look at our MACD line here. That's how MACD line is going, it's going. We are waiting, we are waiting, we are waiting. We spoke a little about this earlier on that little area over here. When we can get an indication here, the reversal here, we can see what's going on here. And right at the point where it intersects and it crosses it downwards, we decide we're going into that trade for a sell. So look at the point of intersection here on that candle here. We have that point of intersection. We wait again to see the full formation of this candle for confirmation, and we enter on the next candle, right? And we stay in the trade. It is going to go down, it is going down, it is going down here. And all here we're in the trade, we're still in the trade, we're in the trade all here on this candle. We're in the trade this candle, we're in the trade this candle, and we're smiling. We're in the trade in this candle here. But look at what's happening here. Even while it is on this candle here now, is here, we're hoping maybe it continues going down. That might have been a little pullback, but here's what. Look at what's going on with our MACD now. It is coming down and our MACD are changing direction. It is now intersecting, it is crossing our signal line from below. So we get out of the trade here. So we get out of the trade right at this point here. We get off the trade here. So our MACD indicates here it's crossing down, we're going for a sell. It crosses up, we get out of the market. It crosses up, we get in for a buy. And we stay in the market. It crosses down, we get out of the buy. And this is what the MACD indicator here can assist us in terms of staying in trade and soaking in the market. But it tells us when we need to get out of the market. Right? Strategy 2, trade the forex using the divergence. Remember we spoke about the divergence earlier. With this trading strategy, the order's accuracy is higher. However, you would need more time to open an order. This is because the MACD divergence rarely appears. We can identify the divergence, and remember, when we see the divergence, it is because there is going to be a reversal, right? But it rarely appears using the MACD indicator. What are the conditions again? A 30 minutes to a 1 hour candlestick chart. So we open a buy order when the MACD bullish divergence appears as follows. And we're going to see it in the chart after. The entry point when the MACD line and the signal line widen and point up. Stop loss is at the lowest price level before it rebounds. We take profit when the MACD line crosses the signal line from above. right? Let's put that in perspective. Let's make sense out of that here. So we are entering for a buy when we see the signal line widens and points up. Let's go back again. When we see, right? When the MACD line and the signal line widen and it points up. So look at them here. They're playing together. They're rubbing like snakes and they're playing together. Remember, it's a buy we're going for. So the market is still coming down. So we're watching the market. All this little area here is consolidation. So they're playing with themselves here. But then now we see what's going on here. Even look at it here. It crosses up. So we know this is a signal for us here. But when it crosses here, it isn't widening. It's playing around here. That's why we still didn't enter the trade. Let's go back and see something here. Look what happened here. We'd have gotten into that sale here. As soon as it crosses, it gives distance. So we know for a fact we can get in the trade one time. This area is something similar to what we're going to look at here. It crossed, but it did, even though there was a little width here, look at what's happening. It's still playing around with our signal line. Here, it crossed and separate. So let's see what happens here. Although it crossed right at that point here, look at what's going on. It is still close to here, but once we start seeing the divergence here appearing, meaning they're widening, it is time we can get into the trade here. So here, although they crossed down here, some person would have gotten into the trade right here, but I've had some pullback down here. And we see when they start widening here, the divergence start appearing here, we got into the trade at this point here on that red candle, the pullback to shoot up. And that's our stop loss, 10 to 15 points below that low point, and it went up. And when do we take our take profit? As soon as we see it cross. Look at what's happening here. It cross and separate, and the market starts coming down here. We have a little piece in a green candle being formed here, and we can get a little indication of that. Look at the shape of that MACD here. Give us a little indication that this is a piece that cut off from here from the slide is a green candle all the way. But we're not interested in that. It crosses for a buy, but we look for the divergence. When it starts opening wider, we have a clear indication, yes, the trend is actually moving. And we see it here. And as soon as it crosses here, we take our take profit up here, right? So that was our bullish divergence we were looking at here. Open a sell order when the MACD bearish divergence appears follow. It's just the reverse of what we just did. The entry point is when the MACD line and the signal line widen and head down. Our stop loss is at the highest point again, and our take profit is when it crosses. So we're using the MACD to enter and to exit. Let's see. So because we are looking for a sell, we are looking for a bullish, not a bullish, but a bearish market here. The market should have been bullish before because we're looking for a reversal, a divergence to indicate the market is going to reverse. So the market has been going up for a while. Look at it here. The market is going here. So we've had it cross down here. And look at what's going on here. So the market is playing here for a while. But after the market crosses here, and we see it's a clear-cut opening. They're heading for down, but they're not together. They're heading for down here. We know we can get into the market, and that's our entry point right here. Our entry point is here. And as we enter the market here, we follow it down here. And again, we get out of the market. Even though they played around here already in the trade, we are waiting until our MACD crosses our point line here, or indication here, which shows us the trend here. It crosses it here now. That's where we get out of the trade, and we get out of the trade at that level here. So it crosses with clear widening, pointing down. We know we are going bearish, and we wait until it crosses again to shoot up, which might indicate a change of trend or reversal or whatever it is here, or just a little pullback or retracement. We get out of the trade and we wait and we observe the market again. Right. So note when using the MACD indicator in Forex trading. The MACD indicator is mainly used to determine a trend as well as a market trend reversal. So basically, It's used for us to determine the trend and when the market is going to reverse. We also use it to search for entry points with the highest accuracy. But we should combine the MACD with one or two other indicators. So we should not just use the MACD in isolation, as I said, and say, oh, I'm a MACD trader, I'm a MACD trader. But we should use it in conjunction with other indicators that adds more value to what we're doing here. It adds confirmation. That's what we need, trading. Trading, we need to have confirmation. So when you enter a trade, you have the confidence that the trade is going to play out in the direction in which you're going to go for the market. Then MACD gives the most accurate signal when used on price charts with long time frames. With short time frames, signal can be misleading. So if you take a 5 minutes or 15 minutes, well, 15 is average time, 15 minutes or 1 hour. So you decide, okay, as we were looking on the chart previously before we started, we already started here. On a 1 minute or 5 minutes here, and you decide to look at it on that here, you can't determine anything on that here. You're going to see a lot of things happening here, but you need to establish solid trend, and you cannot establish a trend in 5 minutes or, or 1 minute. There is no trend in there. The market is just doing anything inside there, right? So we have to get proper time frame, and we had an indication 30 minutes, 1 hour is good time frame for us to use that MACD so that we can enter the market at the opportune time. And MACD is a very good trading tool that is trusted by many veteran traders. Experience this indicator today to have one more basic Forex trading skill, right? So we can use this MACD, combine it with some of the other indicators. And this is why on your trading platform, your MT4, MT5, you can have multiple windows open or multiple charts, and you can have various indicators on it. So you can have the MACD on one chart. You can have another indicator, your RSI, on another chart. You can have your many different indicators on other charts. And the thing about it, on having them here, the various charts, you can have the same currency pair on the multiple charts. So you're looking for confirmation, because when you place a trade, the whole idea is to have enough confirmation that gives you the certainty. Here's what, I am 95% certain that the trade is going to go in my direction because I've analyzed the market and have put all these things into play, looked at it. So when I take a trade, I'm not wondering if it's going to happen or if it's not going to happen. And if we if in when we're trading, it's not trading, we're trading, we're more or less gambling. And this is why we can use these indicators that tell us, here's what, you can stay in the market still. So even though there's a reversal, you might have a retracement, don't just jump out of the market if you're using a MACD. The moving averages will tell you exactly when you should get out of the market. So we have this trade, we have this indicator added now to the list of indicators that we have studied thus far. Question? Anybody has any question or so?
Well, Gary here, where can the MACD be found? On the...
So on your trading, all of the indicators, on your trading platform, if you go to insert indicator, there's a list of indicators. On some of the trading platforms, they are categorized. So you may get, like, for example, you have volumes, and you may get a list of indicators that belong to those volume indicators here. Sometimes again, you would realize later on, there are some indicators that you want, and the MT4 or MT5 does not have it. You can download these separately as add-ons and combine them in your trading platform. So you can go through the indicator list and you can find these indicators. If your MT4, MT5 doesn't have it, some of the indicators, you can get them on your trading view. The only thing about it, with the trading view free account, there is a limited amount of indicators you can put on a chart. So if you have a subscription for TradingView, it gives you added ability to have multiple indicators and many other features TradingView give you. So if you're paying a subscription, you can get down to the second timing when it comes to as time frame. You can do multiple colors for your tabs and other things you have when you pay for the TradingView. But the MACD is a very, very important indicator. It helps quite a lot with the trend. So it tells you, here's what, you're not worrying, should I jump out now? And I realize I'm making a profit, but what if it pulls back here? The moving average, the MACD here will tell you, here's what, time to get out, or you can stay in that trade. But it's there on the MT4 and MT5 platform.
Thank you.
Okay, what was the coordinates or the numbers we're entering again? Is 26.
All right, so let's go back up to that. Oh, you're not seeing my screen. So the MACD,
not sharing.
Yeah. It's 12 and 26, and the signal is at 9. 12 and 26 for the MACD. So the average of the 12 and 26, and the signal is 9.
Okay. So that's the default. That's the default. Okay.
Yeah.
And in terms of apply, it should be close, or as this close, open, high, low. Those you don't trouble those.
All right. So here's what okay, right. So as you ask that, when you apply some indicators, right? Because it's counting candles, you can take it at the open of the candle or at the close of the candle. Okay, let me share my screen and show that here. Right, you see my screen, right?
Yes.
Okay, good, right. So we have here the open of this candle here. The candle, let's just use some lines to show that here. So this is the open of, I'm talking about that long candle here. So let me mark the candle. This candle with the vertical line. So the black line here is at the open of the candle. This here is the close of the candle. Let me just move that a little so I could see the top of it here. This here is the high of the candle. Stay on this side where I put it, good, right? And this one here is at the low of the candle, right? So the candle open here, the candle close here. This was the lowest point of the candle, and this is the highest point of the candle. Remember, our moving average really takes the average of candles before. So if we take a 14, for example, it's going to take the last 14 consecutive candles and gives us the average of this. What in the candle are you concerned about? Are you concerned as to where the candle opened, or where the candle closed, or the highest or lowest point of the candle? Most of the time by default, when you add these indicators, it gives you at the close of the candle, because you're really concerned with where the candle closed, because where it closes, it means that the next one opens right there. So the close is most important for that particular candle. But if you want to do your analysis on the open of a candle or the high point or low point, the option is yours. But how effective is going to be for you if you see where the candle opens? So for example, we are trading on here on the 1 hour, and the candle opened up here. And I want to know if I should get into the trade. When 59 minutes go, it's not so important to you where the candle opened. You're more concerned with what is happening where it closes here, because what happens as soon as it closes here, that's when the next one is going to open. Because when you're taking a trade, I wait for a candle to close, and as soon as it closes now, I'm going to enter the next candle where the candle opened. So the close is more important, because here's what happened. The high and low might just be spikes, especially with things like in the early with Bitcoin and even with gold and so. You will see those volatile currency having some long wicks. So the wick doesn't say as much as what the body says. The wick could just be, a false breakout, but the body has more vibes than the wick of the candle. So that's why by default says when you do your indicators, most of the time it applies it to the close of the candle, because this is more important than the high or the low. But again, if you're looking to just see what the market sentiments may be or so sometimes, or how high the market spike or how low it spike, you can change your application to the high or the low of the market. What can also be done based on, well, yes, you can do it in the MT5. I'm not certain about the MT4. I think you should be able to, but in the MT5, you can run multiple EMAs here, and you can color them to suit. So if you want to do on the close and you want to do one on the high and low, for you to develop your own strategy, you can also do that, mix and match. But for now, if you want to compare, you can open a trading window and you can do on the high, you can do on the low, you can do one on the close, one on the open, and compare them and see what the value really looks like. But most of the time, it's safest to apply them to the close. That's why the default has it applied to the close. Because the open and the close of the candle makes more sense to you than the wicks, high and low. The price didn't stay at the wick, the price stay at the body of the candle. Hope I answered your question.
Yes, that was I was asking. And then the colors of the silver, red.
Yeah, so it's really about you spending time and coloring your stuff. And you see, if you really have to learn an indicator, don't do too much at a time. Learn it so that you reach to the stage where once you see your colors, you know exactly what they mean. You don't want to have to be switching every day, trying a new one. And when you see a color, oh, what did I have that purple color for again? And you can't remember. So you spend some time understanding it. So by the time you see your colors, you know exactly what they mean. And that's what it is. All right, anybody else with any other question or anything that needs to be cleared up?
So you said that these can be used in conjunction with other indicators.
Yes.
Which are the other indicators which ones you think best ones to use it with along with on the different charts?
All right, so the thing about it, we have, as we talk about indicators here, if you're a trader, for example, and you decide, okay, I'm going to use my Bollinger Band, which is going to assist me in what I'm doing here. And I master the Bollinger Band, but I need some added confirmation. So what I'm going to do, I'm going to use my MACD. Sometime again, you may use the RSI, and you have different kinds of RSI. As a matter of fact, you can go into indicators on your trading view, and there are a whole list of indicators that we can use here. So you have moving cross. You have a lot of indicators. So really and truly, it is up to you. So for me, when I use if I use the MACD, I may use the MACD, and I also have like I use the RSI. I use 14. I like 14 on the RSI. So this with the Bollinger Band. So I have the Bollinger Band with my moving average inside of it and the MACD. So I already learned how to use the Bollinger Band, but just for confirmation, I use the MACD also to give added confirmation. Again, if you practice with other kinds of indicators that can work for you, then that's fine. So there is no hard and fast rule that says this indicator has to be used with that other indicator. All of the indicators here, it depends on and I mean what kind of trader you are and who you followed up with. And that's what it is here. You have Bill Williams with a set of indicators. You have a whole set of indicators. As I said, if you're trading, and some of those things are in categories, and you're trading with volume indicators. So there are different types of indicators. You have volume indicators. And the volume indicators, you can go through the list of them and see, okay, I think I want to see this one here. Be it the, let's say, the money flow index, or you're looking at some other indicator here. So you determine what works really well for you, what works well for you here. And you're going to find different persons you get online. Some persons say, well, you have the alligator, you have awesome oscillator. You have a list of indicators that can be used. Let me share my screen and show you, give you an idea as to some of those things that can be used. Let's share screen. I'm going to share back this here. All right. So you're seeing my screen again, right? Let me just change that currency because it wouldn't give me on this here. Right. Look at an analysis here that is being done. And we have categories. So we have oscillators. And inside oscillators here, we have the RSI 14, we have the stochastic, we have all these here, whole list of them here that shows you momentum. We have the MACD, we have here Williams percentage here. We have these here come under oscillators here. Then we have different types of moving averages inside here, right? And still there is a whole host of these here. And these combined together to give you averages. So for example, on the US JPY, if we look at it on the let's say for example, on the 1 hour, the US JPY is saying there is a strong sell on the 1 hour, right? What says that here? We have a total of 11 indicators here. 7 say neutral, 4 say sell. Here we have under the moving average, 18 and 8, that's 26. So from 26 indicators, moving average indicators, 18 of them say we should sell, 8 says neutral. The average of these here is equal to a strong sell. So a lot of combination can be done here. So again, the option is for you as a trader to find which is best for you. So we have these indicators inside here. I'm in my trading view. And this is a list of indicators. So you can go through and see which indicator might fit your kind of your profile. Again, as I mentioned, even previous occasion, the money flow index is an indicator that I like, that gives you an idea as to the volume of money that's on the market being traded now. And it gives you an idea as to where it goes here, right? So these are some of the indicators. Look at it here. We have the fractals here. The alligator is a nice indicator to that persons use a lot. There's a nice one for the iOS. For Mac, there is a lovely config one for the Mac. Again, some are leading indicators, some are real-time, some are lagging indicators. The alligator here, it's predictive, so it comes on before and it has a high accuracy level. So you can go through them and see here. So all these are different types of indicators that you can combine. So again, we have the MACD, we have the Bollinger Band we can use, we have the RSI, and it's just about added confirmation. So my kind of trading will be different to your kind of trading. So a lot of those things here, you just figuring out, okay, I'm going to try this one and see what it is to do that. All right. So back here again, if anyone has any question or anything that's a bit unclear, we can try and see how we can clear that up. But again, you have to persevere with strategies. You cannot just be changing strategies. You master a strategy, you learn it and you add to it. And basically what you're looking for is confirmation. That's what you're looking for. You're looking for confirmation. So when you place your trades, you are certain that you have a level of certainty that the trades are going to play out the way that you want them to play out. So let me share my screen again and show you how we can use some of these indicators on our chart. Let me just share my screen. All right, you're seeing my trading view MT4, right? Tell are you able to see, are you seeing my screen now?
Yes.
Right. So here I have 4 charts. I can add another one to it. Any number of charts that I want. So I have 5 charts here. I'm going to add another one. I just click and I just drag in an open space, and that's how I'm able to add charts. And while I am adding, every time I add, it gets added on here too, right? So I have 1, 2, 3, 4, 5, 6. And here you can see I have 6 charts. I'm going to add one more to it here. Another tab has just been added. 7. So I'm going to show you something what we can do here. Right. So let us work with the GBP USD. I drag GBP USD on this chart. I'm going to make all of them GBP USD. GBP USD. I'm just dragging it on various charts. So all of my charts now have GBP USD. This chart is on the 4 hour. This chart I can have it on the 1 hour. This chart I can have it on the 15 minutes. This chart I can have it on whatever time frame I want. If I maximize this chart here, I have the money flow indicator here. I have the RSI indicator. So that's 2 indicators that are combined on this one chart. That's on my GBP USD 4 hour. If I switch to this other chart here, on my GBP USD 1 hour, I just make it candlestick here. That's why I have the MACD 12 and 26. That's my MACD here, right? Let me just change the background. Background, let's put it that here, foreground, give me blue, bar blue. Again, for those of you who have to customize, that's a good little exercise for you to just see how we customize and get all our charts looking alike here, right? So this here so that's my MACD on this chart here. So here I have RSI money flow index. I have MACD on this chart, this GBP. I have just a RSI on this one. This other one here, I have this CCI indicator on it. And I may want to put on this chart here, let me insert indicators. All right, so you see you have indicators in different categories. So under trend, we have indicators that shows you trend, right? And under that here, I want to put in my Bollinger Band. So I'm going to put in my Bollinger Band on this one here. Let me just format the background so it shows up foreground. Let's see, it's blue bow, bears red, bull candle blue, red. Let's just zoom up a bit so we make the candles, we make them bigger here, right? So this is my Bollinger Band here. We can always change the color of those things here. So now we're trading. We can also insert a EMA if we want to do the EMA 50. Remember we had an EMA 50 here, right? So that's the period 20. So let's make it a 50 and let's put it red. We can leave it like that and just change the size of it here. We apply it to the close by default, open, right? So that's here. So remember again, we were looking earlier, we learned a strategy using the 50 EMA, right? With the Bollinger Band here. Let's just make it smaller, right? So I'm looking at the euro, at the GBP USD, and if I'm trading using my Bollinger Band, and we say, okay, looking to see wherever that gets us. So I'm a master of the Bollinger Band. So I decide, okay, fine, I'm using the Bollinger Band here. And I think I want to get in when the market got here for a buy. But before I go in for the buy, let me just check another indicator, one that we just did here. The RSI. So I'm trading with the RSI. I want to make sure, remember the market is just around here. That's my RSI. I still need added confirmation. That's my MACD. So let me see what happens with my MACD to see what's going on here. I just show you a default MACD here, not the one that with the exact numbers that we did. I'm just showing you how we can lay out for confirmation. And then I have this other one here with the money flow index and the RSI 14. So if I have all these on the same currency pair and I get confirmation here, this is a buy with these two indicators. Let me try this other one here. It says, yes, this is a buy right here. This other indicator here says, yes, this is a buy.
I'm supposed to see the MACD.
You want to see the MACD? Okay, the one with the MACD, this is the MACD here. So we can have all these charts with different kinds of indicators for added confirmation. So if this chart tells me yes, buy. This chart tells me, this indicator says yes, is a buy. This indicator here says yes, is a buy. And all the 6 indicators that I'm using tell me yes, it's a buy. Then I think I'm going to go for a buy. So this is how we can do the layout of our trading view, of our trading platform or MetaTrader 4 or 5, and we can add any number of indicators. So as you're asking me to see as to how we can incorporate multiple indicators, we can do some of the kinds of indicators. We are able to do 2, for example, like this. I can do 2 or maybe even a third one on that same chart because these indicators are volume indicators I can use here, but not all of them is going to afford me those different kinds of indicators. So we need a clean chart. We can do an indicator per tab, and we can have the same currency pair on all of the tabs here. Okay. Again, I just resize and I get back to all my individual. So I could add any number of screens that I want and change the time frame and monitor them to suit. Whichever indicator works best for me. Anytime we want to delete them, we just close them off. All that we don't want, we just close them off. And we just keep what we want.
Now, question.
Yeah.
With the MACD, how many lines you're supposed to see? Is it 1 or the 2?
So the MACD.
Why I asked that, I went onto mine and I'm seeing 1 line with just those histograms.
Right. So just as if we go for moving averages, there are different kinds of moving averages. So if we just go for the MACD, we have to customize, right? We have to customize it because really what we're looking for the MACD is 2 lines we're looking for. One that signals price, right? So a signal line, and one with our moving average, that is the MA, right? The MA in the MACD, or moving average, and we are basically looking for the intersection. So one line cannot do. right? One
Like,
line.
but
We looking
but
for.
I'm only seeing one line on mine. So how do I get the second line?
You're seeing one line on yours.
Yeah, MD4, any MD4.
Okay, so let's see if we can.
So you see for fast EMA 12, slow EMA 26, MACD SMA 9. Apply close, then I see fix, immune, fix, fix minimum, fix maximum. And then, then give me the main color, the signal color, but I'm not seeing, I'm just seeing one line. Yeah.
All right, so let's see what's going on with that. Let's take a let's put a microscope on it. Good, right? So we have a clean chart, and we're going to insert indicators. Trend. We have these under trend. We have oscillators. MACD. Under volume here, we have the money flow. That's where it comes here. We have Bill Williams with his alligator and so. Or some oscillator and the other fractal here. All right, under custom, we have MACD. Right. So we have 12, 26 and our signal 9, right? So we have one line you're seeing.
Yes.
All right, so let us go into the properties here. Inputs, fast, slow, signal, colors. So if you were to add a level, what happens if we add a level? Let's see something. I'm trying to remember how mine is customized. Is that Jack there? Jack not too bright today though.
Okay.
Let's remove this. We can't add. In a case like this, Posey, I can't recall how I would have gotten mine to look as the other one here. But there's
Okay, then I will
there's always
search it.
something. There's always something inside. Where it's right inside here. Let me see what the default one is looking like. Insert indicator, oscillator, MACD. All right, so 26.9 apply to close. Colors, levels. So if we decide to do that, we can't add the EMA. We can't because it's already built in. Anyways, I'll research that for on Thursday and have it how we can get it customized. I've done mine for quite a while. I'll do just hide mine and show it when I'm ready. We know the customize it. And it's an easy something, but I just can't just do it like right now.
Yeah,
So,
that's okay.
yeah, so may I want to research on that here so we could get it looking exactly how we want it.
One more question.
Yeah, even before you go to your question, but this shows the same principle here when that line here crosses. Yeah, so we have that little principle inside it, but it's not as we would have done it.
Okay.
Yeah, you see what's happening here with the divergence here, and then it cuts it.
Yes. Okay.
When it cuts it up, we have that change going on here. So the same kind of principle as going on, but not as we would have done it. Here's your other question.
No. I just want to know that technical thing that you showed in TradingView, is it comes with a free version as well?
Yes, it comes with a free version.
How do I get it? If you
All right, so we let's hide you. Yeah, so basically, there's a lot of things we can do inside here, which you're gonna see here. We can build our own strategy and we can test it inside here. And based on who your broker is, if you're going to trade in panel, you can add your broker straight here and you can trade from inside TradingView if your broker supports that. That's another feature we have inside here. If your broker supports that, you can use TradingView as your actual trading platform here. On this side here, it gives you a lot of information as to the currency pair here. Here, how it would have performed overall. For example, you can see here in 1 week, we had a 0.10% increase. For the last month, 0.47% increase. But for the last 3 months, is a minus 2.27% decrease. So we get some info here. We have a little analysis that is being done here. We have the technical, right? So it just gives you an idea as to what's going on here. And you hit more technical portion, that's where it comes up. We can see what's happening in a different time frame. It advises us what happens in the different time frame. So the 1 minute, that here is looking like a sell here. But if you look at the 5 minutes and 15 minutes, everything else is telling you it's a buy. And we see just a little buy here.
okay, so it's more technical.
And then these here, apart from those other indicators that it summarizes here, we have all these other things that are taken into account to give us these general summary here.
Okay.
So that's where it is.
All right. Thank you very much.
No problem. All right, we're going once, going twice, going 3 times. Any more question? All right, if not, then we say goodbye here and thank you for tuning in. We resume on Thursday night. I hope Mr. Jack feels a little better, not a little better, a lot better and well enough to face those children tomorrow. And for the rest of us, I want to say good night and happy trading. And I hope that by this and Thursday, we can implement some things on using the MACD that is going to help us in our trading journey. All right, as soon as the recording is finished and finish uploading, then I'll send out the link on the chat. So have a good night, everyone.
Good night. Thank
Good night,
you.
Paul. Thank you.
All right.
And thanks, Mr. Paul. Good night.
Thank you very much.
Okay.